What is going on, traders? You guessed it. It is Antoine Farrar back with another trading video with Digital Goatz Academy. Welcome to our market forecast, where we pretty much predict or analyze what the market may be doing the entire week. Obviously, conditions can change, but this is what at least we think what will happen up until Thursday, Friday's time frame, or major news. So welcome to our channel today. Welcome to our call today. If you're tuning into this video, make sure you hit that like button, comment, and subscribe. If you follow my channel, you obviously know we primarily talk about indices. So let's go ahead and open up with S&P. Now, S&P made a buy move today, right? So it did make a buy move, right? And as y'all can see on my screen, we're on the 4-hour time frame right now. And I did annotate what I believe to be a inverted head and shoulder. Again, what I believe to be, because if you follow my channel, like I stated, I believe I suck at identifying head and shoulders or inverted head and shoulders. So as long as price maintains above this area over here, which we have this new month, we should still be bullish. But again, I just like to annotate that just to see the possibility, because if it does break this low, then more than likely it's coming back to this, what we believe to be this right shoulder. But we're not going to talk about all that. I just identified that to um analyze, are we still continuing the trend? So I do believe that we're still bullish. But let's kind of go into what happened today, right? This morning. So a lot of good moves in the market. And as you can see, nothing has really broken structure, right? What we can see just between S&P right now is that price has been ranging. It's been creating, really consolidating versus ranging, because no, we would say ranging. Ranging is more structured than consolidation is. Consolidation doesn't have like data points where the market well, it does have data points, but it doesn't have a specific price where the market tries to touch. A range, you'll see that the market is actually creating structure and bouncing off of a certain price zone or form of structure, right? So let's go ahead and make that gray. I guess we'll leave it at 3. Clone that. Now what I'm doing is just showing you the range. I guess we can make that black so that way we can see it. Now what I'm doing is called price trapping, but again, the only thing that I'm trying to get the visual of is that it's ranging, right? That price has basically hit forms of structure, so resistance up here, support down here. This whole area of support, even though we have, based off of the line chart, that price has basically hit this structure up here. And if we wanted to, we can kind of push this up, but I like to get at least where the wick met, because the wick over here met with this structure. So we could see that price, not exactly, the only thing that has been exactly to the area has been the resistance. The support has kind of been like a little bit above, but anyway, we're still seeing the same thing, forms of structure, right? So what we want is we want this to be the last time, or if price is gonna like pull back to test this support down here. We want that to be the last time that price comes back down here, because any lower, we could be risking that price is actually reversing or trying to push down a little bit lower, which is very possible, especially with these wicks being left over. But we've been bouncing in this range, and as long as we maintain above this resistance, we're still bullish, right? So I'm still expecting S&P to still rise up. Now, this is what happened this morning, or we could just kind of talk about what happened between yesterday and today. Excuse me, man. Hold on. So yesterday, which was Monday, price actually pushed down. It created this gap off of Sunday's open, right? So it opened bullish, pushed the market down to test that. That was basically a trap. I wouldn't say it was a trap, but we we can still see that even in this zone, that this is support if we break it down on a smaller time frame. So Monday, the market shot down, bought up the entire New York session up until no, we didn't. We sold off the New York session. So okay, this was yesterday. I'm tripping. Okay, so we pushed down during like pre-London, going into London. The market bought up, and then of course around opening bell, the market was brought down, right? So the market was brought down during opening bell. It bought back up exactly around 10 a.m., the 10 a.m. candle. We already know as traders, we've been seeing this consistently, is that opening bell brings the market down as long as the trend is remaining bullish. So when we start to see if in the future, we're in a bear market, because I wish I would have been able to show this when the market was selling during the tariffs. When we're in a bear market, we can see that opening bell will have a reaction. More than likely, if this was bearish, I'm just talking hypothetically because we can prove the same thing on the seller side. The entire indices market or the entire futures market is basically bullish right now, right? So any move that has been forced down has always been basically the market trying to get to some form of structure fast as possible and then bring the market back up to blow through that. So we can see each time the market pushed down, which is probably either around opening bell or the entire New York session, the market got brought back up. So opening bell brought the market down to the gap. Now this was a test of the gap, right? Then we went into post market. So basically this was London session at this point when the market got brought down during post, basically Sydney and Tokyo. So after New York closed, I call it post market because nobody's really trading Sydney and Tokyo besides people who trade those currency pairs. So we're not really looking for moves. We're just looking on what the market is doing during Sydney and Tokyo, right? So the market got brought down, pushed back up around 2100, which is 9 o'clock on the Eastern time. Brought the market got brought back down pre-London and then bought back up. What we've been seeing consistently is that when it does that, normally prices continue in that direction. It'll bring the market to get brought down before London, and then London will be the buy up. Now, do you stay in your position for London? No. You get out because there's a possibility that, again, we already know opening bell could bring the market down even greater. I'll be honest, today I didn't think opening bell was gonna bring down the market this aggressively, but we know that opening bell has that possibility. So between Sunday and Tuesday, between Sunday and Wednesday, and I mean like early morning Wednesday, I'm looking to take profit. I guess we should just say Sunday to Tuesday. So Sunday to Tuesday, I'm looking to take profit because I know that data still has to be implemented into the market and it's not really trendy. You know what I'm saying? The market isn't trending at that time. It's just kind of being stagnant, moving sideways, ranging as we're seeing right now. So what my expectations is now that we've gone down to the support, one, we can identify this is support, or we could say that price basically tested this high over here. Remember, the market is always trying to be attracted to some form of doji that we're not paying attention to. And it's normally a high that was broken out of that area, right? So we know that dojis are what? Are consolidation on smaller time frames. Look where the market came down to and where it closed at. Oh my gosh, at that previous high. So we can almost say that this is a previous high without saying that it's support. But this is why I always mention leaving your markups there just to make sure they're not like crowding or causing your judgment to be obscured, but just still make sure that you leave your markups there. So that way, if the market does come back to an area, you're not necessarily confused on what it's doing. So from here, I'm still saying that we're maintaining the uptrend because this is structure. This is support unless it's broken. You know what I'm saying? So what we're looking for is the market to still maintain this bullish trend. We're going into post market, which we know does what? Normally, Sydney, Tokyo is when the market starts consolidating. If it does push down, then that's not saying that it's going to be drastic, but obviously we know it could be forced down pre-London, then buy up by London. I'm still for S&P looking at this to be a strong support area. We just have to see how the market plays out. What's more than likely to happen is that the market probably will push up, and then one of these other days during opening bell, it'll try to push a candle down here in order to test this area. Because again, as long as we identify that one, this is a doji and this is a potential area the market could test, we're not really caught with our pants down. But in this today, basically all the market was trying to do was do a liquidity sweep. We built resistance up here, but again, it's to trap sellers and also to make buyers change their judgment, but also to force buyers out of their position. We'll probably see the continuation of this market break this high. But even when it breaks this high, there's no guarantee that the test will be shallow and push up. It could push all the way back down into this gap. You know what I'm saying? I mean, not this gap, into this range. So for S&P, I still see support right here. Like I said, again, how do we determine that? If you're confused with the line chart, because there's a lot of distractions, you can see it. I mean, if you're confused with a candlestick chart, because there's a lot of noise, you can break it down to a line chart and see that, okay, anytime the market's created a valley, we've been bullish, yo. And just based off of this pattern, because I've seen this so much, I know that we're probably going to buy up from here. It's just that the market decided to what? Range during the most common days, Monday, Tuesday, where the market is a little choppy and hasn't really broken out of an area and is basically trying to trap people on both ends, trap traders on both ends. So what I would think is that we do need a pullback back to this area. This pattern is pretty common, or this formation in a line chart is pretty common. So you can see right there, even if you didn't know that off the top, like with the line chart, this is a high that was broken, right? And it's in our support structure. So I'm gonna see what it looks like on a candlestick, because basically what I'm saying is that this is possibly the area where the market might pull back to, and there you have another entry whenever it decides to do that. Mm. Previous high right there. This doji could definitely be tested again. Or if it breaks high, the market could bring down a candle and then like test it with the wick. At the lowest point, like I said, we could see the market come back down to this area, but that's just once we get further data. The confirmation is that we have been at support. We just don't know how the market is going to react after it's created support. If it's going to continue, or if it's going to actually pull back, do a shallow pullback to continue rising up. But like I said, we're still bullish. As long as the trend maintains one, we're above. I think I mentioned this on my other call, but I don't think we did it on Zoom, where I mentioned about it being basically a new monthly candle. 7 days ago, a new monthly candle was formed, right? Now, what ended up happening is that when you look on TradingView, you you want to base it off of, if you're in America or you're on the west side of the world, you want to base it off of the east side of the world. So when it was October 1st for the east side of the world, that's what we should have focused on. So I just use an example of, I have a friend that's out in Germany, and I just based it off of, they're 6 hours ahead of where my location is at in the United States. So I said, okay, um, that means if they're 6 hours ahead, that means 1800 or 6 p.m. Eastern for me would be 12 in the morning for him. So that would technically be where the new monthly candle started. I found that area and I identified it over here versus saying finding actual October 1st, which still would have, put me in a good position. But what I wanted to do was identify where the candle started. So the market got pushed down and then brought back up. And as you can see in this monthly candle, because when I back up to a monthly candle, you can see that we are bullish for this month. Probably pulled back a little bit. Oh, I didn't mean to do that. Oh. And you can see on the monthly time frame, we're bullish. This is basically where we pulled back to, and this is the current area. So I'm looking at us to continue buying up specifically from this area, which is What price is that? It's locked at 67.28. I actually had a pending order for 67.17, which if we look where that's at. Now remember, based off of your broker in comparison to TradingView, your numbers will be off a little bit based off the spread. So um the first day where the market got shot down where I identified that gap at, I actually had the pending order, and this was where the market did a matter of fact, this area. So it still didn't pick it up off of this zone, but obviously today it definitely picked it up. And that's crazy. Who's on the call? Taylor, I know you're on the call right now, yo. What area did you say? I think you said 6708. I think you said that,
Yeah,
yo.
I
Yeah, that's
did.
crazy. You did say that, yo. 6708 would have been a sniper entry for you.
Just tell me, I'm literally just the S&P queen, like
I feel you.
or maybe
Salute.
I take princess for now, and then in a while I'll be the queen.
Of course, we got to graduate to royalty. You know what I'm saying? I feel you. I feel you. There's a certain hierarchy to doing this, but yeah, sniper entry right there, and that's what it looks like. I don't know what it would have looked like off of Trade Locker, but off of Trading View, um, and you would have off of Trading View, you would have missed it. But I'm sure Trade Locker, you would have probably been put above. I think so. I think it would have been a sniper entry off a trade locker, but either way, still seeing the same thing. You know what I'm saying? I had it just a little bit higher. That would have put me in the trade, but I would have saw the drawdown, which again, traders, y'all gotta be used to seeing drawdown. I mean, I wish we could just be perfect on our entries, but we can't. Let me see. Oh, that ain't even bad right there.
Yeah, like even if I'm looking, if you don't mind me talking,
Eight
I know you
dollars.
live.
No, go ahead, go ahead.
Yeah, so like even like on Trade Locker, like it would have went a little bit. I think it kind of like it went down just a little bit, but I mean it wouldn't have been like whoever they would have got in at that, it wouldn't have been like we wasn't in like when I wasn't in a major drawdown, if that makes sense. Like it
Right.
probably wasn't no more than I don't think I barely saw. I think the most I saw was probably like $3-4.
Yeah, and that sounds about right. Okay, okay. So it's like, so okay,
And
you saw.
I'm in at 6708.
Okay, you got in, and you only
Yeah.
saw. Okay, that's what's up. That's what's up. So you only saw 40 pip drawdown, which again on a point zero 0.01, y'all basically heard the numbers that she mentioned, which wasn't that big. And obviously, if you just do the math based off the lot size, it really ain't that big. So that really was a sniper entry, yo. Yeah, I mean, because we count anything lower than, I wouldn't say 10 pips because it's indices, but definitely anything under than like 200, 100 pips, like specifically for S&P. Yeah, that was a sniper entry, especially since you got in that area and you had it set for a pending order, or you physically got in, I mean, manually got in.
No, no, no. So once everything happened, I closed out everything. I took away the pending order. So I actually got in, but I really wanted to be in at a point, I mean zero a 0.2, but I ended up getting in a 0.02 at 6717. So I was like,
Okay.
when it went down, I said, okay, you know what? I just instead of doing another 0.02, I did a 0.01.
So you win twice, but you technically moving like you win three times.
Well, I'm technically in four times because I also got
Okay,
another one up.
okay.
Yeah. So I got one up there at a 0.03. I got, yeah.
I got you. I got
Yeah.
you. Yeah, so basically, one, this is showing that another trader was seeing basically the same thing that I was projecting, that I was already seeing. And I remember she had mentioned this entry prior to us even identifying these zones. So that's a testament right there. But that also gives me confidence that yeah, I'm seeing the correct direction on what the market is doing overall based off our bias. Yes, is there a possibility for the market to push lower? There's always a possibility for the market to do whatever it wants to do. But that's why we rely based off of market structure. I believe technicals go a lot farther than just fundamentals alone. I do use fundamentals a lot. You can ask my community, but I don't rely on fundamentals. If anything, I rely on technicals. If I didn't look at fundamentals, it would be okay with me as a trader, but I do think that it definitely adds to the accuracy of what you're pinpointing in the market. But again, snapping on S&P, so we just needed to break above this high. Again, today was pretty moderate news, nothing really going on in the market that really could have changed the direction. It was just basic price action. I don't know if Trump said anything today, so that's really when there's not any high impact news or high volatile news. The only type of information that I look for is if Trump tweeted something, you know what I'm saying? Because he definitely can sway the decisions of investors, which will obviously pour into the market. So let's look at US 30. And the last thing that I'm going to discuss is GBP USD, just because we made money from there, but I don't like sticking to Forex pairs. But we did make an opportunity from a play that we've been calling for GU. I think there's a possibility for it to drop more, but you'll see when I basically go to it. So US 30, same thing. Um, Push down, and obviously, if you trade US 30, it's very aggressive when it does its pushes down. So this push down basically came off of what? The opening bell. Now, this isn't guaranteed, but opening bell works like this, right? If it starts off bullish, like if the market goes dumb bullish and you had that entry, you might want to close out your at the profit, because the market did that too aggressively. And what I've seen in my experience as a trader is that when the market does that, it's actually trying to bring it down, because I don't know what its reason for that, but what I've seen is that if we're buying and it aggressively goes negative, like it starts selling off immediately, it's trying to find support. If it buys up immediately, and I'm talking about initially, the opening bell 9:30. Now that's on Monday, Tuesday, and with a lot of high impact news or whatnot. As long as we're going into Wednesday, I don't believe that. You know what I'm saying? I kind of toss that out a little bit, or I just fire as I need to, right? But normally when the market 9:30 market opens, gets dumb bullish, dumb, and I'm talking about dumb, not just like a little bit, but like dumb. It got dumb bullish this morning. That's normally to try to trap the buyers in. So sellers had an opportunity within this consolidation zone and then push the market down, which is basically, you can still say that that's backed up by what we already believe by opening bell. The opening bell is going to bring the market down anyway. The only thing is that it got dumb bullish and then probably entice, more buyers to buy in, and then aggressively slowly brought the market down. It didn't do it at first, because this happened in like a couple of seconds. Like, what was that? Like a 4,000 pip move. I think I was over here. I said 4,000. No, that was a 1,600 pip move for US 30. And then it brought the market down to where? All the way back down to the support structure. Still, again, this is met by the opening bell candle. So when we see that, you can kind of look at two things that happen, really three things. So when the market is being brought down after opening bell and it does it aggressively, I'm talking about a big sell-off, but you're still saying that, well, it's still playing to the structure of an uptrend, then what you have to wait for, these are the two turnaround points. Around 12 p.m., you'll start seeing signs that the market may try to get bullish, which it did. Around 12 p.m., the market started what? Consolidating, or basically rejecting this area. Even though it pushed down here, it started rejecting this area. And then by what? 2 p.m., 3 p.m., we've discussed this, you probably start seeing the market start buying up. So this was basically the scenario of where the market sold off the whole day and then bought back up towards the end of New York. We've seen that too, and it still remains a bullish trend. I'm not saying in this scenario that we have to just subject ourselves to that as a bullish trend, but we've seen that happen so common that we have to believe that, yes, this is still structure, this is support in this area. So based off of what? we have we have a previous level of consolidation, and we have a support structure, and we have a high that we're still above. The market just decided to test this high really this wick. And I was worried about that, but I thought that this was the area where the market was gonna buy back up, which it did. Don't get me wrong, the market did buy up. But if you didn't take your profits, then you were probably out of luck unless your entry was still below here. But even so, you don't want to see it come all the way back down here. You want to take your money and then have the opportunity to jump back in when it's going lower. You see what I'm saying? But this was basically, and again, it did what it was designed to do. You're not going to hit home all the time. And even with the best experience, unless you're just the dude who practiced ultimate patience, yo, which I haven't seen them yet. You know what I'm saying? Like you got to be like a monk in the charts. You're going to fall prey to these traps. You know what I'm saying? You're going to be a victim of these traps designed to get you comfortable, make you feel like, oh, but there will be signs that the market is turning over. The example that I just gave y'all, that's a sign right there that, okay, the market got dumb bullish. How can it stay dumb bullish? One of my mentors told me, if it's fast, it don't last. You know what I'm saying? So opening bell shoots up negative, shoots down bearish, you know it's buying up. Shoots up bullish, you know it's probably selling down. And that's not to say that it's reversing the entire direction. What it's doing is trying to get to a form of structure as fast as possible. That's the best way I can explain it. And I hope that definitely helps the community because that's just how it is. I don't even think that there's knowledge based off of like opening bell out there. It's just like, hey, make sure you're not an opening bell. You know what I'm saying? So we're cracking the code to how Open Bell operates, and I do think that the algorithm's definitely going to catch on to us. But until then, we're taking advantage of basically this process that the market does. So a trap right here, and then again, it drove it lower. What does this look exactly like? This looks exactly like the example we saw from S&P 500. If I go back where I said that I believe that the market was it had like two traps. It had this one and I had this one. Really, this was filling the gap. This was actually filling the gap because I was still skeptical because it left a wick. And again, when we see gaps, this is what we want to see. We want to see a candle on that side. We do get lucky, but the fact that it didn't truly fill the gap, and because that's the one thing that I said, that's why I drew this line because you see, based off this circle, that covers the entire gap. I need to see if there was a wick that was going to cover that, I needed to see it go below this. You know what I'm saying? Like below this circle or even to the bottom of this circle. It didn't do that. But again, trapped us over here or trapped I wasn't trading S&P, but we had already had a position that was low anyway, but still, trapping anybody that got into the market like up here, drove that motherfucker down. You know what I'm saying? So we fell prey to, and again, you're not going to be able to call it all the time, but again, this US 30 looks exactly like S&P as far as like those traps that were laid out. And that was the trap right there. But again, I still had structure left over. I still had my markup. So I still believe that this was structure and that we had the possibility to come back back to this consolidation zone because these areas can be tested as many times as they want. Now, Taylor, I don't know if you're still on, but I don't know if you remember, I said that that's probably what's going to happen this week because how the news has been so docile that the market was going to decide to test these areas. I actually didn't believe it. I was just kind of saying it because I've seen it from experience, but it's like it damn sure did that. It
Right.
started testing these areas, the same areas that you'd be like, there's no way you can go like 2,000 pips upward and then come back to that. Not in the same day, you know what I'm saying? Or not from the previous day. Maybe like after going, no, that's what it's been doing. Exactly how I called it. And I didn't even believe it. And I said that, you know what I'm saying? Just like, yeah, it could do that, but it's not gonna do that. No, it's been doing that. It's been coming back to these same entries until it's ready to break out. So make sure you're not getting caught and understand that you still want to see structure. When the market left this, yes, it left a trap, but I still know that from this sequence, I need to see support. Once I got support, I feel a little bit more comfortable. How do I identify support? I go to that line chart. So, like I said, I'm still viewing indices to still be bullish. I don't look at the NASDAQ, but anytime the NASDAQ is basically operational, which is like New York session. I look at it to do immediately the opposite of S&P and US 30. I look at S&P and US 30 to be similar in movement. Like if S&P was buying up, eventually US 30 should buy up or vice versa. You know what I'm saying? Once they complete their market cycle, especially when they're forced by news and stuff. You know what I'm saying? So indices across the board still bullish, but just know NASDAQ, if it decided to sell off, it's selling off to buy back up, but that's why I don't mess with it because it just seems like it has a mind of its own. But we're still here maintaining structure is what I like to see. And I want us to, have some form of a pullback for US 30 and then continue to trend buying back up. Yeah, that's the best way I can call it right now until we get more data. But like I said, I haven't changed my directional bias. I believe that we're still bullish. So last but not least, let's go to GU. And there's not much to say because we've already discussed that GU was in a downtrend. We mentioned that basically from that last meeting that the ECB had, right? The European Central Bank, or was that from the buy up? That was the buy up. We weren't paying attention to the market when it did this. Yep, that was the buy up. CPR, yeah. So that was the buy up, and then finally it hit a form of structure. Because again, technicals are king, hit imbalance, and then we identified that the market, I think we were like right here when we identified the possibility of it selling, and then we got the confirmation. So I was absolutely sure that yes, we were going to continue selling off. One, we've seen this in the past where the market creates this false sense of inverted head and shoulder, and it sells it good. You be like, man, I'm sure that that's a head and shoulder or inverted head and shoulder. And you be sure. And it's like and then it does even one of these numbers, you know what I'm saying? Like pushes that up, you know what I'm saying? And so you're enticed to even believe, man, you're like, oh man, GU's about to go to the moon. I believe that up until a certain point. I knew that one, we were looking for the market to push down, but I also knew that once I identified this inverted head and shoulder, who else could identify it? Anybody really, you know what I'm saying? So the market makers or the banks, whoever you want to say, Illuminati, I don't know, they can identify it as well. And I knew that we were going to get swept on this other side. It just happened extremely fast. So once we got this confirmation, I knew that we were going to push down. Everything in between that is just kind of like, what is the market going to do? This is point A. We've talked about this. This is point A. Point B should be where the head is presumed to be because this is not an inverted head and shoulder. Because if it was, it wouldn't have violated the right shoulder, it would have basically continued this trend up. Maybe a pullback, shallow pullback, but it would continue this trend up. So now we know that GU is continuing to push down. One, the DXY has been inflated. I think I even mentioned, I'm not sure if I mentioned this on a call, but my belief was that Donald Trump has a coin possibly being made, just like, George Washington and Abraham Lincoln, but his is going to be valued at $1. I read that as positive news for the US dollar, or I guess you can see it negative because eventually it'll clash with the fiat currency that we already have, paper money. You know what I'm saying? But anyway, not to go too deep into that, I believe that that was going to add like basically high influence to the dollar in a positive way, which it did. If you saw USD JPY on Sunday, it went 249 pips. You know what I'm saying? So seeing that, that's giving me even more confluence that I believe that, okay, now that I'm looking at the dollar to be strong, the British pound should be weak, but we've already gotten our technicals that the British pound is weak. We just have to find our entry points. So as you can see, this morning it dropped. I got out of this area because again, I have support down here. So I was like, well, I don't want to try to hold this trade and I didn't even care about like what it was gonna do, but I knew that there was support here. Let me take my profit. But again, if you're following this trade, you could have just taken your profit, get up, and then get in this entry when price basically broke down to the low of this area. So this is truly the low point that price broke out of, and then it's finally tested that area. And you can say it tested the low of the gap too. This is a gap. Whenever I have purple, there's a gap around that area, and you can see it over here. Man, I didn't even realize the gap was that big on the hour. I have to cover it here. So yeah, it tested into the gap, which was already a low point that we previously had established in the market. I know there's a lot going on, but this is how we are able to stay like current with our analysis and not get confused what the market decides to throw out there when news is filtered into it. But that's all I got, traders. Again, I hope everybody makes a lot of money. I hope this was valuable and you use this resource because it's just free money at this point, especially with it being on YouTube. So I'm answering